Today I'm gonna try to make everything I do a tax write-off for the next 24 hours. And I'm gonna take you with me every step of the way so that you can see the entire journey for yourself. Because ultimately, my goal for people watching this video is to start giving you some ideas on tax write-offs that you can use and start incorporating in your daily life as well. But first, let's go over the rules I must follow on my challenge of making everything a tax write-off for the next 24 hours. Okay, rule number 1, I cannot spend any money out of my pocket unless it is a tax write-off. Rule number 2, I cannot eat anything unless it is a tax write-off. And rule number 3, I can travel anywhere unless it is a tax write-off, and I've got some places to go. Now, tell me down in the comment section below if you think this challenge is too easy or too difficult, and if you've ever done anything like this before. So right now it's around 7 a.m., the sun is going up, and I'm getting ready to get my day started, so let's get into today's challenge. Okay, before I get into my first tax write-off, it is very important to note that I can make this video and take a lot of these tax deductions because I am a business owner. And when you are a business owner, you have the power to write off almost anything. The 2 big rules that apply for businesses are, number 1, the expense must be ordinary and necessary for the business, meaning the expense is something that would naturally occur for someone in this line of work or in this industry. And then number 2, the expense must be necessary in order for the business to progress or to operate. So if you are a business owner or if you are thinking about starting a business, then a lot of these tax write-offs from this video will also apply to you. All right, so let's go ahead and start with the first tax write-off. Now, usually I work from home in my second bedroom, which is my home office, where I host meetings, I jump on Zoom calls, build tax plans, and I do a lot of my virtual work. But today I'm working out of my second location because I have a meeting later on in this video with one of my partners to discuss some growth strategies. So I need to travel, bringing me to my first tax write-off that I'll be using, the vehicle tax deduction. Because here's the thing. Since my home office is my dedicated office and my primary location, then anytime I leave my home for business, which is what I'm doing today, I get to write off the mileage from my primary office to my secondary office using the standard mileage rate, which for 2024 is 67 cents per mile. So let's get going and see exactly how big my tax write-off is going to be. All right, so I just made it to my second location and I ended up driving a whopping 4.4 miles, which gives me a $2.94 tax deduction, which is that 4.4 miles driven multiplied by the standard mileage rate of 67 cents per mile. Now, keep in mind, I will get this tax deduction when I travel back from my secondary office to my primary office. And plus, this won't be the only place I drive for business throughout the year. So let's just say hypothetically, I drove 10 business miles per year for the rest of the year. Well, that would add up to giving me a $2,445 tax deduction, so it definitely adds up. Plus, my business travel is short and your business travel may be a lot more, which will give you a bigger tax deduction as well. Now, if you do decide that you want to do something similar and implement this same strategy for yourself, I want to leave you with a very important note. Your home office must be your primary office and it must be in a dedicated space inside your home, because otherwise, if you're just driving from your home office to a business location, then those are considered to be commuting miles and those are not tax deductible. Okay, now I'm here at my second office, which is a popular co-working space here in Atlanta, Georgia, and I pay about $500 a month to have access and rent this space out, which of course is another great tax write-off. And there are plenty of open areas, there are private areas, so it's really nice to use this space to meet with my clients or my team, network with other business owners, or sometimes just get outside of the house. Plus, they have coffee, they have snacks and fruit, which is something I am definitely taking advantage of today so that I can eat a small breakfast tax-free. Now, what's super nice about this tax deduction is I can expand it by renting out one of the office suites or even accelerate the expense by paying my membership fees annually. And with that, let's get to work. Okay, so I just finished setting up my workstation and it occurred to me that I have some more tax write-offs to share as well. Now, obviously the items that are necessary for you to operate your business are all tax deductible. So here I have my monitor, I have my laptop, I have my phone, which a percentage of my phone that I use for business can be written off. I have other accessories like my mouse, my work glasses, and so on. But I wanted to quickly highlight my MacBook because this is the new MacBook Pro with the M3 processing chip, and it was something that I bought as a year-end tax strategy. So I bought this around the last week of December because number one, I needed it. My other laptop was starting to deteriorate. And number two, and maybe more importantly, because I created a tax plan for myself, I knew exactly what my liability would be or what I would owe the IRS. And it it was slightly higher than I wanted it to be, so I made this purchase in order to help. And because it is a qualified tax write-off, with the help of IRS code section 179, I'm able to deduct the entire cost of this computer in the year that it was placed in service and essentially own this tax-free. So when it comes to business and what you're doing, don't think just about what you can write off now, but also think about what can you write off at the year's end. All right, so now I'm sitting down with one of our amazing partners, Joel, and he's in charge of helping people get signed up and working with our team. So Joel, what do people need to do if they want to get started and work with our firm?
Yeah, so that's right, Sean. So if you need help with tax preparation, tax planning, or even tax implementation, then just click the link below and my team will be happy to assist you.
Sounds good to me. After a few minutes of discussion, both Joel and I got hungry, so we decided to head out and get some lunch. Thankfully, we didn't have to travel very far because there are restaurants in nearby walking distance. So we just simply went downstairs, found a restaurant that we liked, ordered there, and then we grabbed a table to continue our business conversation. Now, since Joel and I are continuing to discuss business, we get to take advantage of what is called the business meal tax deduction, which basically works exactly like it sounds. Okay, if you are having a business conversation over breakfast, over lunch, over dinner, or any kind of meal, then you can write off between 50 to 100% of the cost associated with that meal. So let's talk about what type of meals determine the percentage that you're able to write off. So meals that fall under the 50% category will be stuff like business meals with your partners and your clients, food for a board meeting, or even dinner provided for employees who are working late. While meals that fall under the 100% category would be stuff like a company-wide party, meal and entertainment included as W-2 compensation to your employees, or food and drinks provided for events. However, it is very important to note that the meal cannot be lavish or extravagant. Now, while the IRS does not specifically give us an amount of what would be considered lavish or extravagant, this is where you as the business owner have to use good judgment. For example, I wouldn't be spending $1,000 for an extravagant dinner just to discuss our calendars and our schedules for the next week. That sounds a bit lavish and extravagant, at least in my opinion. On the other hand, if we were trying to win over a client and the deal size was about $1 million, then maybe taking that client out for a $1,000 dinner could be justified. All right, so for this tax write-off, we're able to deduct 50% of our total meal costs, and the check came in to be about $50.77, which gives us our deduction. And if we were able to do this 20 to 30 times per year, then that would give us an estimated $1,500 tax deduction for our meals. Now, meals and everything else really should always be substantiated with proper documentation and proper record keeping. For meals, what I like to do is write on the receipt exactly what was discussed, take a picture of it, and then upload it into the cloud. And that way I always have documentation of exactly what was discussed, and because the date and the time is printed, I have exactly when this business conversation took place as well. So that's a pro tip on how you can use your business and write off meals as a tax deduction. After the lunch meeting, we both went back to the co-working space where we got some important tasks done before wrapping up the workday. Then I packed up my things and had plans to go work out so I could show you all this loophole I'm using to write off my gym memberships in a super cool way. Now the time is around 6:30, and look, I'm someone who believes that health is wealth. So I try to work out at least 3 to 4 times per week, and today is one of those days. Now, gym memberships cost money, and generally they are not tax deductible. So going to the gym for this challenge could be a rule break, but remember that co-working space I was working in earlier? Well, one of the major benefits of being a member of that space is that you get access to this state-of-the-art gym that has all the equipment that I could ever need with a full schedule of fitness classes as well. So now I get to work out and make gains tax-free. Plus there's a sauna, jacuzzi, pool, and everything is great. Now this is one of my favorite hacks for tax write-offs, and I usually don't make videos like this, so if you enjoy it, please tell me down in the comment section below and subscribe for more. Also, it is very important to note that gym memberships are very difficult to use as a tax write-off in many other scenarios. Even if you're working out with a client or you're discussing business with a partner, this is all still considered to be personal expenses. The only exception to this rule is if you are a professional trainer or a professional athlete and it is critical for your career or your business to be in shape, such as an actor getting ready to be in a movie. All right, so workout complete. The time is about 8:30 and it's dinner time. And you may have been wondering, how am I gonna write off my dinner tax-free? Well, remember that business meal that I had earlier? Well, thankfully I have some leftovers, enough leftovers to help me squeeze out the rest of this challenge. Then I'm gonna hop into my car right off the drive back home and then share some of my final thoughts. But speaking of the car, I should mention that there are two ways to write off a vehicle. The method that I talked about at the beginning of this video is called the standard mileage method, but I could have also used the actual expense method, which would have allowed me to write off stuff like my gas or charging expenses, my repairs and maintenance, my car washes, and a big one, depreciation. And depreciation can be accelerated to present a massive year one tax deduction. But I have an entire video where I break all of that down in more detail, so I'll link that video at the end of this one so you can watch it if you would like to. All right, so now I'm gonna eat my dinner, head home, and then share some of my final thoughts around this challenge. All right, it's been another successful day here in tax-free paradise, and I'm at home now getting ready to call it a day. But really quick, the key takeaway I want to leave you with is sometimes the best tax write-offs, the best tax deductions are reserved for entrepreneurs and investors. And that is why I always encourage people to pursue your business interests, because if you are in the higher end of the tax bracket, then depending on the state that you live in, your tax rate could go all the way up to 50%, which means when you're purchasing products or services for your business, it's almost like you're getting a 50% discount, and then tie that into your lifestyle and you could be living a tax-free life. Because when you have a business and what you're doing is ordinary and necessary for the business, then you can write off almost anything. Just make sure you don't write off your wife.
Sean, where have you been?